Hello traders, you're welcome to today's video. In today's video, we are going to be focusing on change of character. We already explained change of character to mean the change of the trend of the internal structure of the market. And what do we mean by internal structure? By internal structure, we mean the market structure of a lower time frame when considering a higher time frame. Like we can see in this case, the higher time frame is this move up. Let me just draw it to just show us. This is the higher time frame of this movement. This is the higher low, higher high, higher low, higher high, then we have a lower low here. After the break of this higher low, then the expectational order flow will be bullish. So in this major structure in red, we have the minor structure, or what we refer to as the internal structure. Okay, now the change of character is a change of the trend. We already know that, for instance, for us to have a change of trend, we must have a break, or we must have price trading through the structure that led to break of structure. This is what I mean. In an uptrend, this low led to the break of this structure. So this is going to be our higher low. This low led to the break of structure. This is the break of the structure here. Break of the structure here. So this low is going to be our higher low. We continue. This low, took out this high to form a higher high, or led to the break of structure. This low becomes our most recent higher low. Okay, if it happens that for us to have a change of trend, there must be a break of this most recent higher low. Okay, that is when you can say that we have a potential change of trend. Okay, so we can refer to this as a change of the character of this trend. The initial character was uptrend. So when we have a change of character, we are not expecting what? After a bearish break, our expectational order flow is supposed to be what? Bullish. And now we expect price to be going down. We expect the character of that trend to change to bearish. So this is what we're trying to see, this change of character. In the case of a downtrend, how do we have a change of character? We wait for the break of the most recent higher lower high. Okay, this is what we call change of character. Okay, change of character here as well. Okay, it's very important. This is the initial trend down. Now we are supposed to be having the trend up. So that's what we mean by change of character. And if we come here, we have this trend: high, low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So far, the most recent higher low is this. And when that low is broken, we have a change of character. So we expect what? A change of this internal structure, from bullish to bearish. Okay, and we can start identifying them. So we have a change of this bearish structure to bullish structure by this change of character. Look at this lower high broken here, we have another change of character, and so on and so forth. You start seeing them on the chart. Now, it is not all the time. Is it all the time that a change of character will actually lead to a change of trend? Not all the time. If not, trading would have been very, very easy. Okay? And if it is so that every time we have a change of character, we have a change of trend, it's so easy to trade this. You can just make here your entry price, put your stop loss above this high, and then you capture all of this move as your profit. It would have been so easy to trade. Okay? Now, if once we see a change of character, if price must change trend, it's so easy. You just put your entry here, your stop loss here, and you trade up, capture all of this move. Okay? But it is not all the time that we can continue doing that here. Okay? It's not all the time that a change of character will actually lead to a change of the internal structure of the market. It's not all the time. So that is exactly what I want to draw our attention to. Okay? Now this is where we're actually focusing on. Now you can see we have this trend, this bearish trend. We have this high, low, lower high, lower low, lower high, lower low, and then we have a change of character. So if you assume that because we have a change of character, okay, therefore we are ready to buy, we put our stop loss here, you can have trades like this taking out your stop and taking you out of the trade. It's very, very possible. So you need to be very careful. It's not all the time that we have a change of character and you want to expect the move to continue upward like this. Okay? That is exactly what we're trying to say. So the answer is no. It's not all the time we have change of character that we trade in the opposite direction. So we should not always assume that when we have a change of character, we cannot trade in the opposite direction of the trend. Okay? Why is that so? Sometimes there might be liquidity, which we refer to as money, lying above this high, okay, that the market will actually need to trade above this high to capture all this liquidity in order to get more fuel to continue its movement, in this case downward movement. So sometimes it happens this way. Price wants to clear the liquidity existing above this high, there are liquidity existing. So whenever you are trading and you sense that there are liquidity existing above a certain high, be very skeptical and be very careful to know what to do. Okay? And if you ask me, how do I know that there is liquidity resting above a certain high? This is what we are going to learn going forward. Okay? Now please just know that it is not all the time that you have a change of character that you must just take your trade. This is possible most times as well. You can win this trade most times, but this is what we refer to as risk entry. It's kind of risky. Okay? Now this is what we call a confirmation entry. All of these things you are going to see them once again. Okay? This is what we call a confirmation entry. So what do we do in this confirmation entry? Okay, we don't enter immediately we see a change of character. What do? After we see this change of character, okay, we don't know for sure if price is going to, continue this downtrend or wants to reverse. What we will do is to wait for a break of structure. So after a change of character, the next break is now a break of structure, because it has confirmed that we are now bullish. Okay, after this break of change of character, so you wait for a break of structure. When you see a break of structure, this is more, likely to be successful than this kind of entry. Okay, then you can place your your entry and put your stop loss below this high, below this low, sorry, to capture this move up. So this is what we call confirmation entry. And also you have to be very careful as well, because this can also happen, okay? This can also happen. Let me just try to see if I can zoom it. Yes, this scenario can also happen where after you have a break of a change of character, and then actually, sorry, I did not, and then you also have a break of structure here, which should be enough, but sometimes it is not enough. Whenever you have a break of structure, what controls you is liquidity. If liquidity, even after this break of structure, and you identify that liquidity is still resting below this low, there is a very high probability that price can still come and grab the liquidity resting below this low, and then your stop loss is not going to be placed under this low any longer, but this low to be more safe, or to be safer. Okay, I hope you understand what I'm trying to say. So all of these things, this is most times in my strategy. I don't like trading this. It works, but it depends on you. I can trade this, I can also look at this as well, you know, just for you to get more confirmation in order for you to place very high probability trades. It's very important that you place high probability trades whenever you are taking trades in this business. So that is exactly what I really want to show us. The key point here is, look, can you identify liquidity above a high or above a low? Okay, in this case, you might be confident to take this trade if you know that liquidity might not be resting here. You know, people's stop losses might not be resting here, you know, then you might be more confident to take the trade. But if you know that liquidity is resting here, even after this break of structure, this second break of structure, okay, you might still expect price to come and clear this liquidity before, you know, going up, as you can see. So these are just the scenario I really want to show you in this video. Thank you, and I wish you all the best in your trading.